Hey guys, Dan MacArthur here with Vibe Realty. Just wanted to come at you today with a quick market update. It's been a minute since I've done one of these things, and the market has certainly shifted, as you've probably heard in the media. I wanted to kind of unpack the real numbers for you, show you what's going on in terms of HPI price, sales to actives, how much inventory is coming on, how many transactions are happening, and just kind of bring you up to speed in what we're seeing in our market, as well as kind of share some anecdotal information I'm seeing working with buyers and sellers, as well as some other industry partners I've sort of chatted with. So to kick it off, let's just get right into the HPI index for detached homes. So if we look at what we're seeing currently, and the most latest data that we have is for July, we're seeing the HPI index sit around 1.6 million, 1.594 to be exact, and that's down from the peak that we saw in March of 1.776 million. Looking at apartments, it follows sort of the same trend in terms of the HPI index coming down. So at our peak, which was right around in April for apartments, we were at right around 590,000. Now we're down around 553,000. Looking at townhomes, similar trend, 932,000 down to about 876,000. And then homes with acreage actually doesn't have enough data for the HPI index. But if we look at median price, we are seeing a decline in homes with acreage as well. Popping over to sales to actives. So the sales to actives ratio is, I like to say, if you were to drop me off in Winnipeg or a market I had no context for and said, hey, what's going on in this market? This would probably be one of the first stats I'd look at. I would look at price, and I would look at, of course, sales to actives. And this one would tell me who's being favored in the market. Is it the buyer or the seller, or are we in a balanced market? And historically, we've defined a balanced market of anything between 12 and 20% sales to actives ratio or absorption. So that's how much inventory is getting bought up month over month. Over 20%, we say we're in a seller's market, and under 12%, we say that we're in a buyer's market. So looking at the detached home market right now, we've come down from our peak right before Christmas, really, when we had a massive inventory shortage and a ton of buyers of right around 76% absorption. So crazy seller's market. Every listing pretty much has an offer date, and we'd see 10 to 15 offers on every single property, and it was mayhem. That's come all the way down to right around 10%. So 10% absorption means 1 out of 10 or 10 out of 100 homes are getting bought up month over month. So we're in a buyer's market, but not a crazy low buyer's market historically. Looking at apartments, again, right before Christmas, we saw crazy numbers, 140%. So homes are hitting the market with 0 days on market, getting basically subject-free offers written the day of, and that's all the way down to around 27%. So technically, for apartments, we're still in a seller's market. This is what we would say is a healthy market, right around 27% absorption. But when you're going 230 kilometers an hour and you slow down to 120, it feels slow, but it's still fast. Townhomes, following a similar trend. So again, right before Christmas, crazy inventory shortage. I know that we had a few listings in that time, the townhomes, and we're trying to help buyers buy them, and it was insane, and we were seeing unprecedented sales figures. We're at 193% absorption. That's all the way down to 17%. So at 17%, we're still in a balanced market. That's, it's not favoring anyone, but it feels like a crazy buyer's market right now because, again, we've had this, last few years where we have been in a very, very strong seller's market month over month. Homes with acreage, following that similar trend, we're right down around 8.2%. Generally, the numbers can get so astronomical. We see fairly low absorption just because the buyer pool is so much smaller. So that's kind of what we're seeing as far as pricing and how the market has shifted, from a crazy seller's market to pretty much a balanced market across all asset classes. Looking at active listings, we are seeing aggregate inventory start to accumulate month over month because we are seeing properties not sell that historically would have cleared out, month over month. So aggregate inventory is on the rise. And again, this sort of reconciles. If you look at these numbers right before, let's actually just go to all property classes. So we'll look at all the homes listed right before Christmas. We only had 1,700 properties in the whole of the Fraser Valley listed. Now we're sitting around 6,500 to 6,200, that sort of range right now. So we have a decent amount of aggregate inventory, but it's not an unprecedented amount of aggregate inventory. We're starting to accumulate as prices are falling a little bit. New listings are dropping off. Now that tends to follow historical trends. If you look at what we're seeing in August of 2021, August of, let's go back to 2020. So we are seeing, say right around 2,200 listings coming on in the month of July. In July 2021, we had just over 2,200 listings. So the inventory numbers are sort of staying consistent. It's just the amount of transactions are starting to fall. So we'll hop into that now, looking at the amount of sales. So sales are certainly down. In July, we only had 946 transactions. Looking back to July of 2021, we had 1,900 transactions. And looking ahead to August, we're seeing a similar trend as well. And in August of 2021, we had right around 2,000 transactions. It doesn't look like we're going to break 1,000 transactions for August. So the market has slowed down quite a bit when it comes to properties actually transacting. And a lot of that is linked to interest rates. So as you've heard, interest rates are certainly going up. Looking at the 5-year fix right now from RBC, we're sitting right around 5.5% for a 5-year fix, which is quite, historically quite high. Looking at the market in the last few years, obviously, folks will tell you that in the 70s and 80s they saw, insane rates. But if you look at the income multiplier in terms of how much homes cost, that wasn't there either. Like if you're buying a townhome for $900,000 and the family income is say $150,000 versus buying a home for $60,000 and the family income is $20,000, obviously it doesn't really reconcile, right? So interest rates are high, and that is putting downward pressure on pricing. But I guess what the main question is where did the buyers go, and are they still out there? I've talked to some of my industry partners, specifically looking at REW, the search site. I'm featured there as a buyer's agent in Abbotsford. And chatting with my contact there, they say that their impressions are down a little bit. Generally, they're seeing around 6.5 million impressions per month. They're right around 5.6 to 5.8 month over month as we've gone through this transition. So as much as buyers have cooled off a little bit, and I think a lot of that is to do with the pandemic, sort of becoming an endemic, and we're sort of out of it now. And there was, certainly pressure from Vancouver, Burnaby, North Vancouver, of folks moving from there out to the valley, out to Abbotsford and Chilliwack, seeing prices there lower and still seeing a lot of the activities that they love to do. There's great mountain biking, hiking, golfing, all the things you love to do maybe on the North Shore are available in the valley. So that market has sort of cooled off, or lower people come through, but the buyers are still there. But what we're not seeing is them click through, not book showings, so that part has slowed down. But it does seem to be picking up a little bit. Hosting open houses, sometimes you'll host open house, you'll have 30 groups through, 20 groups through still, but then you don't have any offers. Or sometimes you'll host an open house, you think you're well priced, and you get no one through. So it's really unprecedented times, obviously, coming out of the pandemic, coming out of this crazy market that we're in. It'll be interesting to see what comes. Are we headed for a total crash? I'm not sure, because the underlying problem is still there. It's not like we have more supply now than we did, and that and the demand is totally gone. Again, those impressions per month on REW are still up. So I'm not sure if we're in for a total crash. I think once we see interest rates stabilize, we'll maybe hit our new equilibrium price. And if we do that, then we might see the market rebound a little bit. But I think we're in for another few months of maybe plateau to, prices heading downward a little bit and transactions heading downward a little bit. But yeah, I don't have a crystal ball, unfortunately. If I did, or if you have one, please let me know. I would love to purchase it from you or borrow it for an afternoon. But yeah, that's what I'm seeing, guys, out in the market. If you have any questions, please feel free to call, text, email me. If you, what do you think is going to happen? Do you think the market's going to keep going down? Do you think things are going to recover? Or do you think our interest rate's going to go up to 10, 12, 13%? I don't know. I just don't think interest rates can go up too much before the economy really starts to be impacted by this. Because if you consider, a lot of developers get, again, super bearish when interest rates go up and they're unable to sell their pre-sale homes, and we need more homes. So that's a problem I see. I also see, we have a consumer debt problem as well. I mean, the average Canadian carries around $30,000 in unsecured debt, right? Lines of credit, credit cards, things of that nature. So those rates can't go up in a vacuum. Your mortgage rate can't be 15% and your credit card is 19 or 20. So yeah, I don't know what's going to happen, but I do know that there's still pent up demand out there for buyers, and we still don't have enough supply. So where that holds, where the opportunity is, I'm not sure. I think, looking at the data, if you're looking to upgrade, it kind of makes sense too, because the strongest market right now is apartments. So you're selling your apartment with a market that's around 27% absorption, buying into a market that has 17%. Townhomes follows that trend as well. You're selling your townhome in a market with around 17%, and then you're buying into a buyer's market. And then if you've always dreamed of having that little piece of heaven, and in a position to do that now, and get that home with acreage and sell your detached home, there's certainly opportunity there as well, because the softest market is homes with acreage. So yeah, it's a good market to upgrade in, because again, it's tough to sell but once you do sell, you're kind of in the driver's seat as far as going into the market and buying homes, because we're seeing a lot of subject to sale offers right now, which is tough. And if you're not subject to sale, that just looks amazing in this market, because again, we've gone from it has to be subject free, it has to have the biggest deposit and the most amount of money, to now, hey, if you have a 10-day subject removal, man, you look really good out there. So yeah, anyway, guys, if you have any questions for me, feel free to call, text, email anytime. Love to talk real estate. Thanks for watching. Have a fantastic day.